Thank you very much, and we welcome our chief guest, Shri Tarun Bajaj on behalf of PhD Chamber of Commerce and Industry. We welcome all the dignitaries from the Ministry of Finance, Department of Revenue, for today's post-budget interactive session on implications of Union Budget 22-23. Being organized by PhD Chamber of Commerce and Industry. So, because we will restrict to our time trajectory, already we have passed the 5 minutes. So now we will start session, and straightforward, I would like to invite our Senior Vice President, Shri Saket Dalmia ji, for the welcome remarks. Shri Saket Dalmia ji is the Managing Director of PG Industry Limited, a leading manufacturer of the Italian marble flooring, and he is Senior Vice President of the PhD Chamber of Commerce and Industry. Shri Saket Dalmia ji, for the welcome remarks, please.
Thank you, Sharma ji. Good morning, everybody. Namaste, Tarun Bajaj Saab. Thank you so much, sir, for coming again to our chamber and on a regular basis to help our members and to share your thoughts to the members. A warm welcome to Tarun Bajaj ji, Revenue Secretary, Ministry of Finance, Shri J.B. Mahapatra ji, Chairman, Central Board of Direct Taxes, Shri Vivek Johri ji, Chairman, Central Board of Indirect Taxes and Customs, our chairs, Mr. Mukul Bagla ji from the Direct Tax Committee, Mr. Bimal Jain Saab from the Indirects Committee Chair, Sachit Jolly ji, our co-chair for the Direct Taxes Committee, Pallavi ji, our co-chair for Direct Taxes Committee, Shri Tushar ji, our Indirects Committee co-chair, our dear SG, Mr. Saurabh Sanyal ji, our esteemed past presidents. Thank you so much for being connected to the chamber and guiding us always. Dear respected sirs, as the economy turns the corner, leaving behind or perhaps learning to live with COVID, our Honorable Finance Minister, Shri Nirmala Sitharaman ji, has boldly taken the bull by the horns, if I may say so. With Atmanirbhar Bharat, Make in India being given a push, with Amrit Kal aspirations, a new vision of a developed India has been rolled out with the budget of 2022, as we were just discussing shortly, and I'm sure all of us agree. Gati Shakti, CapEx boom, ECLGS extension and enhancement, PLI schemes, they all signal that the government is listening and reacting. In such a dialogue-friendly government environment, we at the chamber reached out to our members, mostly from the middle economy, and asked them what is the one thing they would want from the government more than anything else in this hopefully beautiful journey of growth. So the reaction and reply was instantaneous and unanimous. Trust. There is a continuing environment of mistrust from the side of the government agencies towards companies when it comes to revenue. Perhaps this is a curse of a hangover of the license Raj, and perhaps an era of socialism resulted in an environment of distrust which has its reminiscence still there. The beginning of every interaction with the government agency when it comes to revenue related starts with one of mistrust. I'm unsure whether it percolates from any political or administrative thought process. But one thing is for sure, sir, it creates an environment of fear and uncertainty for the business person at large. As the economy is turning into an organized one, it's time to change this narrative, we feel, sir. I think it will be the single largest game changer to incubate an environment of trust and will foster better conformity to taxes and will be a game changer in ease of doing business as well, sir. This could be that one thing, respected sirs, to turbocharge tax compliance. Furthermore, sir, state level overreaching GST related administrative powers is having a devastating impact on small and medium companies. It cannot be disregarded by the center as a state matter, sir, since the whole concept of GST is based on one nation, one tax. If this is addressed, sir, we will see further robustness in GST collections and also encourage new enterprises for times to come. With faceless assessments of tax returns getting to be a reality, an equally important attitude has to be of trust, sir. Otherwise, we could see an overreaching by the arms which still have physical assessment procedures. Sir, I think we are moving from a developing to a developed economy on a very, very fast pace. This budget, if I may so, as our past president, Mr. Talwar, mentioned, is probably a watershed moment from 1991. This could be the now from a poor economy to a developing economy, now from a developing economy to a developed economy. Sir, I request on behalf of the members that if we make the process of interacting with the revenue departments a more friendly and trustworthy experience, probably the mindset of the individual and the entrepreneur will help the cause of the government to give back to the individual and entrepreneur. With these thoughts, sir, I give the mic back to Sharma ji. Jai Hind. Thank you so much, sir, for being here with us, and we look towards listening to your valued thoughts. Thank you.
Thank you very much, sir, for your very crisp viewpoint and your thoughts about the Union Budget 22-23. So now moving ahead, we request our chairman, Shri Mukul Baglaji, chair of the Direct Access Committee, PSD Chamber, for his viewpoint on the direct access. Shri Mukul Baglaji, please.
Thank you, Sharmaji. I hope I'm audible. Respected Shri Tarun Bajaj, Honorable Revenue Secretary, Ministry of Finance, Shri J.B. Mahapatra, Chairman CBDT, and Shri Vivek Johri, Chairman CBIC. I also welcome our leadership, including our Senior Vice President, past presidents, Managing Committee members, and my dear friends. At the onset, let me congratulate the Honorable Revenue Secretary and his team for delivering an extremely growth-oriented budget. We had a pleasure of meeting the Honorable Revenue Secretary and his team during the budget memorandum. And I would like to thank him for accepting several of the requests sent by our chamber. Every budget has its hits and misses, and in our opinion, the budget had more hits than misses this time. The major hits, in our opinion, was the substantial increase of over 30% in the capital expenditure for fiscal 2023, which is expected to re-kickstart the investment cycles. We're happy that there are no new direct taxes on income and on capital gains. We also appreciate that there's a continued focus on affordable housing under the Pradhan Mantri Awas Yojana. On the direct tax fund, we really welcome a lot of measures which have been taken. A lot of clarity has been provided over the taxation of virtual digital assets. This is a request we actually made before the Honorable Revenue Secretary when we met him. We really appreciate the reduction in minimum surcharge on 15% applicable on all long-term capital gains. We had a request to extend the sunset clause for Section 115 BAB in respect of the manufacturing entities which are taking the benefit of 15% tax rate. So we are extremely happy that it's been extended by one more year. We feel that this will really help in setting up of many new manufacturing units, and we really look forward to that. We applaud the decision on the date of extension of the date of incorporation for eligible startups for taking the tax benefits. The change on the introduction of the provisions of filing updated returns for 2 years on payment of additional tax is extremely welcome. However, we feel that the tax rate of 50% when the return is filed after 1 year may be a little too high and maybe looked upon and probably slightly modified if possible. 25% seems to be pretty all right, but the 50%, we're talking about genuine mistakes. We're not talking about concealment of income like here. So I would just request the Revenue Secretary, in respect of genuine mistakes, if that can be considered. We genuinely believe that applaud the new law reducing departmental appeals on matters already under litigation with higher authorities. We feel that this would really eliminate the unnecessary departmental appeals which were happening on year-to-year basis. One major change which the Honorable Revenue Secretary has made is in respect of provision to revise the returns in case of merger of companies after receipt of the order sanctioning the merger. I think this has been a very welcome change. This clearly reflects that the government is really applying its mind, and there was a genuine hardship being faced in case where mergers had happened, but the SSC was not able to revise its return because the due date of filing of the revised return had expired. So I really thank the Honorable Revenue Secretary for considering that. I also appreciate the effort made by the government for plugging various holes for leakage of revenue, where the leakage of revenue was suspected, by introducing the following changes: the changes in respect of the extending the bonus stripping provisions to shares and the units of AIF, etc. Introduction of TDS on gifts and benefits given to dealers and agents. I would request that an exhaustive circular is issued on what will constitute a benefit, because this is they were very. I'm really applaud the government. In the past, they have issued circulars wherever required. Last year, we had a lot of circulars coming on Section 206 AA-B in respect of TCS. So I would really request the Honorable Revenue Secretary to come out with a circular on Section 194R, explaining what exactly is the benefit when we give gifts to the agents or the benefits of the agents. What exactly would qualify and what would not qualify. I really appreciate the new provisions where it has been introduced that the income unearthed during search cannot be adjusted against brought forward losses. This will act as a major deterrent to the tax evaders. We as a chamber applaud that. A few misses, I would not actually call them misses, but these are actually some of the expectations which we had, that there is no reduction in the tax rates for small businesses like LLPs and sole proprietorships, which have remained constant since the last 15 years, in spite of substantial fall in the corporate tax rates. So we gave this request during our budget memorandum also, and we, as a chamber, we represent a lot of small and medium-sized businesses. So I would request that probably in the next budget we have some relief on that account. We also feel that the flat rate of 30% on the virtual digitized assets, where the assets are held for more than 2 years, we feel that probably they could be considered as a long-term asset, and a tax rate of 20% could be considered on that. But overall, taking a holistic approach, we are extremely delighted with the budget and congratulate the Honorable Revenue Secretary and his team for delivering a very, very balanced budget. Thank you so much. Thank you.
Thank you, Chair Shri Mukul Baglaji, for your suggestions, particularly for your suggestion for the small businesses. Now, I would like to invite our Chair, Shri Bimal Jainji, Chair of the Indirect Taxes Committee of PSD Chamber of Commerce and Industry, for his viewpoint on the budget.
Respected Sri Tarun Bajaj Ji, Revenue Secretary, Sri Vivek Jory Ji, Chairman CBIC, Sri Mohapatra, Chairman CBDT, our leadership, Senior Vice President and past President, distinguished members. Sir, let me compliment and appreciate having election in 5 states, and it could have been populist budget, but we have focused on growth-oriented budget. We have focused on GDP growth 8.5% to 9.2%, and achieving target of $5 trillion economy by 2025. So we appreciate this aspect. PSD is being represented by MSME, sir, and one of the proposal which we have given our pre-budget memorandum, and you have carefully listened that particular proposal during pre-BM meeting. Basic custom duty is being rationalized, either reduced or exempted on raw material, input and component, to boost Make in India, vocal for local domestic manufacturing. This is going to help. Cascading will go away. We will have local manufacturing in India, and we need not require to import finished goods. And thereby, outflow of convertible foreign exchange will not be there. So balance of trade will come out. We highly appreciate the same. Second announcement, sir, SEZ Act going to be repealed. Now you're talking about inclusive growth by both central and state. And definitely it is going to be engine for growth and development and boost our export and create the job as well. Coming on GST front, sir, January month is the luckiest month, and during your tenure, sir, we have got highest ever collection in GST, 1,40,000 crore. So we congratulate the team from CBIC, GST, and all trade partners to make this GST great success for the nation for growth and development. 1,40,000 crore in the January month. At the same time, there are certain trade facilitation measure which is worth noticing for all the members here, that you have allowed that time limit to avail credit now would be by 30th November of next financial year. Even the credit note which we issue in GST, time limit is now being made 30th November of next financial year. And you have further allowed the amendment of GSTR 1 and 3B in case there is any omission or error by 30th November of next financial year. Two important aspects which is worth noticeable, that if we have wrongly availed some credit but not utilized, if we are reversing credit, no interest going to be leviable, and that too retrospectively from 1st July 2017. And rate of interest also rationalized from 24% to 18%. And the next good change, having distinct person under same PAN number. If I've got e-cash ledger balance in a particular GST number, that can be transferred from one distinct person to another distinct person pertaining to IGST and CGST. Little apprehension can't be do for the state SGST and UTGST. Yes, we do understand because that is a state component, how it is doable. I'm just leaving a thought to you, Revenue Secretary, sir. Now coming back to certain important point, which is very important. See, GST input tax credit is soul of GST. When GST got introduced, it was envisaged there would be seamless flow of credit. Now we are finding conditions, 4 conditions under section 16, subsection 2, that buyer should have tax invoice copy, received goods and services, supplier must have paid taxes, and regularly filing GST return. We got 5th condition. Now it should be auto-populated in GSTR 2B. But in this year budget, again 6 restrictions are being placed under section 38. And those 6 restrictions are on top of the 5 conditions which is already there under section 16, subsection 2. So I would like to highlight one important aspect here. We know that these provisions are being meant as deterrent against the tax evader. No denial. But sir, let me draw your attention, because we could not introduce automated GST return system, GSTR 1, 2A, 2, 1A and 3. For that reason, these small tax evaders have come up on table, and they have issued fake invoice and the concept of fake credit existing. Had this automated GST return system implemented, then we would not have this kind of problem. But nevertheless, when these provisions are being made as deterrent against the tax evader, only submission is at ground level. The genuine and honest taxpayers are being facing the brunt of these provision, which is stringent provision. So my humble submission, I do agree it is deterrence against the tax evader, and we are not advocating for the tax evader. We are here for the genuine and honest taxpayer. Maybe simplification, because GST was envisaged as a good and simple tax. So I'm leaving it to you for your deliberation and taking it forward and making GST success for all of us together. 1,40,000 crore, and we are also working on expanding tax base. So once law gets simplified, I'm sure, and I'm telling you, that once law gets simplified, it will expand the tax base, and this revenue of 1,40,000 crore, maybe 2 lakh crore in years to come or 2 years to come. With this thought and appreciating and giving
thank you
to the Revenue Secretary and the whole team for this growth-oriented budget.
Thank you, Shri Bimal Jainji, Chair of the Indirect Taxes Committee. So now I would like to invite our Chief Guest, Shri Tarun Bajaj, Revenue Secretary, Ministry of Finance, to address the members of PSD Chamber of Commerce and Industry. And I would like to mention that in his tenure as Secretary of Department of Economic Affairs, economy was in the extreme lows, and he pulled the economy from the lows of 24% in the quarter 1 of difficult year of 2021 to the positive trajectory very much in the third quarter of the last financial year. With the lot of reforms starting from the MSME sector, small businesses, and the NBFCs, each and every segment of the economy was facilitated with the lot of reforms, plethora of reforms by the Ministry of Finance and Department of Revenue. So we invite our dynamic leader of the economy, Shri Tarun Bajaj ji, Secretary, Department of Revenue. Shri Tarun Bajaj ji, please.
A very good evening to all of you. Shri Saket Dalmia ji, Dr. Sharma, Mr. Mukul Bagla, Mr. Bimal Jain, other members of the chamber, my colleagues from CBDT, Mr. Mahapatra, and CBIC chairman, in case he's here. In the morning he was not too well, so I don't know whether he's here. Mr. Vivek Johri, thank you so much for your kind words and also a very incisive analysis in the time given both on the direct taxes and indirect taxes as to what have been our hits and misses. But before I come on to the taxation front, I would like to, since you mentioned my tenure as Secretary Economic Affairs also, so I was just remembering the day that I had joined as Secretary Economic Affairs and the way the economy was going at that stage, and there was a complete lockdown in the country. So one didn't know how to navigate the economy at that difficult time. But I should say, while we were working on this side, I should compliment your chamber and all other chambers for having continuously interacted and given their suggestions and explained the issues that we were facing and also telling us what to do. So I think we have come a long way from there. I had never imagined that in about 2 years' time, from May 20, now we are into February, that we would have done so much, and we would be, the finance minister would be complimented for our 2 budgets, which I would tell you that they were the most difficult in the making, because in the first budget we didn't know what to do. We had done some 5 mini budgets as Atmanirbhar packages, and then we had to come up with a budget. It brought in a lot of reforms, and all of you hailed it and supported it, and similarly you did the same thing. You are doing the same thing for this budget. Before I come to the taxation part, I would just like to say that the emphasis, since you're a chamber and it will be of interest to you, that the whole idea for this budget was that we need to give a push to the economy. If the GDP can be given a push through our efforts, then I think a lot of things start falling in place. If the GDP goes up, the employment situation improves, the industry also feels that there is demand in the market, the demand goes up. If there is a demand, then the capacity constraints in your facilities will start troubling you, and you will do more investments. That is what we wish, that the private sector should take over the investments right now, which has been dominated by the government sector. So we have been trying to do that in the last budget as well as in this budget, which is visible from the fact that our capital expenditure has gone up from 5.5 lakh crores to 7.5 lakh crores. Let me also say to you that when we were allocating 5.5 lakh crores last year, we were really thinking whether we have the capacity to spend this amount and spend it on real infrastructure which has the benefit for the economy. So we are happy that we would be actually achieving that target, and this year we have extended it to 7.5 lakh crores. And the best part of this, which I feel, is that 1 lakh crores out of this will go to the states. On the one hand, it supports the states which are already short of funds, and also for the last mile infrastructure, this would be a great help to the states. In my view, this is one of the highlights of this budget, which has actually been hailed by the media, press, and the experts who have commented on this. Then there are other issues also. On the MSMEs also there has been some attempt. The ECLGS has also been extended, and the amount has also been enhanced, and those sectors which were not covered earlier are to be covered. The CGTMSE is to be expanded by another 2 lakh crores, which should provide collateral-free loans to the small and medium industry and also the micro level industry. So I think all this should help, because what we have noticed so far is that the corporate sector, the organized sector has been able to cope up with the virus, has understood how to live with the virus, and is moving ahead. There are some issues with the informal sector, but in our view, with this budget and with the money, if it is able to go to that sector, the informal sector also should come up in the current year, and we should see some improvement over there. One factor which is very important in the budget making process, which was, I think, something which was at the back of our mind last year and this year we have extended it, is the transparency in the budget making process. We have nothing hidden in the budget in terms of our revenues, our expenditure, and if at all we have been criticized for underestimating our revenues, and maybe the feeling is that we could have actually shown more revenues and reduce the fiscal deficit or increase the expenditure or increase the benefits. But I should also tell you that what we have seen is that last year we got a bonanza, or not last year, this year we have got a bonanza of revenues, and that has helped us to handle the situation which emerged during the year where the expenditure actually expanded by 3 lakh crores. We were able to cope up with that because our revenues went up. But it is not necessary that every year we'll see this bonus. So it is always good to have, I would say, a realistic estimate, not a conservative, but a realistic estimate, and not unrealistic estimates like we were giving in the earlier years, where you would sheepishly and the media very aggressively would tell us that our figures are all wrong. Having said that, on the tax regime, I would say that our effort now, especially when in the month of August, we abolished the retrospective taxation, which you are aware of, and I'm happy to say that we would be settling almost all the cases in that in this month itself. So we'll close that chapter once for all. So stability, predictability, and not giving any surprises is a matter of tax policy which we have implemented. And I think we have implemented it more on the corporate side than on the individual side, which you have mentioned in your remarks. I'll also try and answer that. Some of the issues that you have said have actually been at the back of our mind, and I think Mr. Bagla, you spoke about the distrust that exists between the department and the taxpayer. I would say that the philosophy is changing a bit. The faceless has made a huge difference, where we at times also want to know where this case is, and we can't find out because it is faceless to whom it has gone. So all these matters, perforce through use of technology, will help in building up trust between the taxpayer and the tax department. There may be a few isolated cases on our side, and I accept it, and it will always be our effort to improve that. And I would be always willing to listen to you as to how we can make improvements. While I say this, I would also like to say that during the course of the last 1 year, my first experience of dealing with direct and indirect taxes, and on both fronts, I have seen some very stark violations from the industry side, also on the taxation front, both on direct taxes and indirect taxes. And some of them you would see that we are trying to cover through loopholes, but leave out the usage of loopholes which can be justified in a manner that I'm doing tax planning, but there are sheer cases of avoidance of tax You must have seen the recent raids that have been conducted, and huge amounts of cash have actually been recovered from premises of some industrial units. So I would say that sometimes our vision would get colored by such anecdotal instances and isolated instances. And I think it is very important, and the role of the chambers also becomes very important in this case, to ensure that such cases are minimized. They cannot be eliminated. But I'm very happy with the comments both by the experts on the direct taxes and indirect taxes, where this issue was accepted, and you actually mentioned, and it was very pleasing to hear when you said that we have tried to cover up loopholes on bonus stripping and things like that. Then benefits given to agents, then also on the cryptos. So it was very pleasing to get that message from you. And I would say that at least for me, and I can say this for both my chairman and the boards and the departments, that we are always open to listen to your views, your comments. You had come to me before the budget also and gave your suggestions. Some of those suggestions we have been able to carry. Some suggestions we have not been able to carry for other reasons also. But we would definitely be looking for your suggestions even now, because there is still a period of a month and a half before this bill gets passed. If there are some changes that we need to make, we would be most willing to do that. I'm very happy because this issue has not been covered by the media and the press a lot, of the indirect taxes that we have tried to reform. I have mentioned this in my earlier addresses at places, that we have really tried to do some groundwork and real groundwork on the indirect taxes, especially the customs side, to see. The philosophy was that whatever we can make in India, we should have moderate duties. We should not have such high duties that we go into a protectionism regime, but at the same time have some moderate duties. Things we cannot manufacture, we should have lower duties. Raw materials that we don't have, we should have lower duties. And some of the items on which exemptions are required, we should actually exempt them. And some items we should also reduce duties, because that helps us in our export efforts and also in creating manufacturing. So we have actually also reduced duties on items which go into manufacturing of capital goods. So all those things. So it's a huge list. And to be very frank with you, I was a little apprehensive, because when you come up with such a huge list, somebody will point out that we have made a mistake here or there. But I think, as I told you, we still have time to rectify them, and I'll be very happy to get a very clear feedback from you on those kind of things. I would like to mention that we have reduced duties on raw materials like chemicals, petrochemicals, some capital goods, electrical and electronic items, gems and jewelry. So all these items, I think, should help my domestic industry, and we should see an increase in the exports and also in the production and the profits of the corporate sector. There was one mention which I would like to cover up, the other technical issues on the indirect taxes. If my colleague is here, I can answer a few of them, but I would not like to take a chance. I would like to give him the opportunity of answering them. You also mentioned the reduction of tax rates on proprietorships and LLPs and partnership firms. So I would say that we really need to expand the tax base in this segment. Only then would we be able to look at those things. Because when I look at the figures, I find that that just doesn't include the business houses. But if I don't include the salaried, if I don't include the corporates, and if the remaining segment I look at, so the return that came up in 2021, for which we have done an analysis, only 31,500 rupees per return was paid as tax. So I think we also need to look at what is happening in this segment, and maybe it's a lot of informal business goes on there, but GST, the formalization that we are doing, I'm sure in the times to come, we'll realize the benefits of formalization of our businesses paying taxes, building capital, all this would be of help. The last thing that I want to say is that both direct taxes and indirect taxes now have a lot of data. They are sharing data with each other. That is also helping us. And we have no intention of trying to give surprises to the corporate sector or to the business sector. We are actually trying to put a lot of that information in the public, in a system where the person who is paying those taxes or who should be knowing that information is available to him, so that when he files his returns, he is aware of what information is available with us. I'm sure with all these steps, we together, the businesses and the government, will be able to move ahead. And if we can grow and move out of the pandemic in the current year, then maybe the next year we can concentrate on other matters which are of importance, which you have raised, the other interested groups have raised with us before the budget. We could not do. Maybe we can look at them. With these words, I'll close, and I thank you for having me here and speaking to you. And as usual, I have always been very frank in my views, and I'm sure you too have been very frank in your views, and we should be like that so that we are able to help each other. Thank you.
Thank you very much, respected sir, for demystifying the budget 22-23, and we would like to compliment you that now economy is again looking up, and we are the fastest moving economy in the world economic system, not only in the top 10 economies, but our growth rate is highest as compared with the emerging, developing, and advanced economies. So moving ahead, I would like to invite our chair of the Direct Taxes Committee and Indirect Taxes Committee to moderate the session for the various questions from our respected former presidents and other senior members of PSD Chamber. Shri Mukul Baglaji and Shri Bimal Jainji, please.
Respected Revenue Secretary, sir, with your open comments and remarks today, we at PSD CCI ensuring you that we will contribute our best of the possible suggestion for the growth, nation, and development. Rest assured about that. And whenever you feel like our participation and contribution, we would be at your doorstep. So starting with the question answer session, requesting Sri Rajiv Talwarji, who is a past president for PSD Chamber of Commerce, to post his query.
Thank you, Bimalji, and of course compliments to you, Tarunji, and to the chairman of both the CBDT and the CBIC. I think we are, first of all, while we did ask for trust, I must tell you also that not now, but for a decade and more, our chamber has always been saying before every revenue secretary, and I have both Mukul and Bimalji as proof, that we always tell everyone that the private businessman also must try and pay all the taxes that they should be paying. We do know that we ask for trust, but we also keep in mind that all the rich people in this country do not pay all the tax that they should be paying, and we urge them to do so constantly. You had given a very good analysis, and I think so had Mr. Mohapatra, that a few years ago, the non-salaried average tax was only 26,000 and the salaried was 76. It has gone up from there to 30 and to 90. We hope that soon we should be talking of 40 lakh crores as revenue. As Bimalji said, 24 in GST, and perhaps hopefully 26 to or 14 to 16. And tax. You've done a marvelous job by lowering the, of course, now to come to the budget, 80 lakh, I think, big idea. One big idea, houses to be made and for 8,000 crores to be in various kinds of cities and towns, then 50% of those should not be staying in slums or unorganized. So we therefore request that when we think of planning, it should be something like 8 crore homes of just 300 square feet size. If we give it on a rental basis, sir, of only 50 rupees per day, 1500 rupees per month, the revenue from 1 crore homes and 1 crore 12, which have been made already, 12 lakh, would amount to something like 20,440 crores. Besides stoppage of theft of electricity, which will be metered, water, gas, and the biggest thing, if it is in the name of the lady of the family, you can imagine the kind of push it will give to education and digital payments when an optical fiber cable network is ensured. You've done a great job, sir, that you have extended this benefit of affordable housing to 2023. That Act to be amended. Sir, we have a full paper on that, on both the things which we will present to you, hopefully in physical form, which will be one on the scheme of RAHO, Rental Affordable Housing Option. We prepared a full paper on that and we would like to present it, just a page and a half. And the second paper would be on SEZ amendments as asked for and requested by the industry which is practicing REITs as well as SEZ, IT and ITES, which contribute immensely and which have got $40 to $60 billion worth of investment into such IT and ITSEZs already. And Mr. Schwarzman, the chairman of Blackstone, promised $100 billion to be invested in India. I think that's a very big thing, sir. You've also done the we request for ITC in commercially leased buildings, because that will capture the tax trail and hopefully convert into greater revenues. And sir, the GST slabs, which have been a common feature which everyone has asked for, that they need to be rationalized, in which we are quite sure that whether it is GST slabs or whether it is direct taxes slabs, I think in the years to come, the way we are going and progressing towards a 5 to 10 or even a $20 trillion economy, I think we'll get all that. That's the first big thing. Housing and construction is the first big idea for the future. The second one would be agricultural cooperatives, sir. If Amul can lead a movement of the dairy farming and make India the largest producer of milk, I'm sure, sir, that for 2.5 acres and small holdings in agriculture, which account for the majority of the holdings, agricultural cooperatives is the future way to go. And maybe the new Ministry of Cooperatives under Mr. Amit Shah as the minister perhaps can lead the way and change the future of agriculture in this country, modernized and lots of new practices. The last thing which we would say is acknowledge the very, very good budget provisions for not only hospitality and tourism sectors in the ECLGS, but also the 2 lakh crore provision for MSMEs. I think if we just induct some technology and engineering as a part of that, that would change the face of manufacturing production in this country. We only hope that it will be to your notice. And so we request you that allow us to place these two papers, one on the rental affordable housing option and the second one on the SEZ Act rethink, which we've prepared section by section before you and the chairman of CBDT and CBIC. Thank you very much, sir.
Would the Honorable Revenue Secretary want to comment on that, please?
Do you want to respond? Do you want me to respond, Mr. Sharma?
Sir. Yes, sir. If you can give response to the observation made by Rajiv ji.
Mr. Rajiv Talwar, I think, is in Lisbon. This is the chatter I heard before I joined it. So, आपकी बीच में आवाज थोड़ी कट रही थी. So, I think I've got the import of your message, but some bits we missed out. I don't know whether I missed out or the others also missed out. There was this thing.
Sir, I'm in Delhi, sir.
I would be very happy to see. No.
I'm in Delhi
Mr.
only,
Talwar,
sir.
I would be okay. I would be very happy to receive your paper on rental affordable housing. You know, there is the housing ministry has actually circulated one rental policy or rental
Yes, sir.
legislation to all the states for this thing. So I remember when I was looking at it in the PMO, I realized that some of the countries actually just live on rent. They don't buy houses. People are born and they leave this world in a rented accommodation, which may not be so prevalent in our country because of the situation that it is. So I would be very happy to receive it because it will ease out a lot of issues, and you being part of the real estate would know that a lot of houses actually lie vacant in all the places, maybe the smaller ones also, the larger ones also, and people are afraid to give it. So I would be very happy. On the SEZs, I don't know. I had done a few meetings before the budget, and I think DLF had also participated in that.
Yes, sir.
You yourself had participated.
Yes.
We got some excellent suggestions which we have shared with Ministry of Commerce, Department of Commerce. Commerce wanted to come up with a legislation, so we are waiting to see that legislation. But again, I'll be very happy to receive your comments because it will help us in the next 3-4 months to crystallize our views and our, I think, ambition on the SEZs is similar. So let us see whether we can reach a conclusion or reach some milestone where we can help these very well done infrastructure which we are not utilizing at this point of time.
Yes, sir.
Some of the units have spare capacity. Some of the units actually want to shift away from SEZs to the DTA areas. So what is it that we can do? And also for the developers, what all we can do. But there is one promise that I have put in the budget, which is that I will definitely ease the process of customs in the SEZs. We don't want to be present physically in any area. We are not present in the EOUs, movers, or even the containers and the the loads that go from the ports. We do a risk management analysis, and based on that, we check the cargo. So we would like to use technology to regulate the SEZs as far as customs is concerned, rather than being present physically. I think that would definitely help. Your suggestions on agriculture cooperatives, on technology are welcome. If you want to share anything with us, I'll be very happy to take it and give it to my colleague here who would be looking at it. And on the cooperatives, as you know, we have brought down the tax rates, the surcharges this time, and made them equal to the corporates. And I think that is a good step. On the GST and ITax, income tax, you have also mentioned a few things, and your colleagues have also mentioned a few things. So we will look at all these things, but let us see what all we can do, how much can we chew. One last thing that I want to say is that you might have seen less on the income tax side. One of the reasons for that is also that while we would like to correct it on the corporate tax, we have actually given a tax regime of 22%, which is now the average tax being paid by the people has come down to, it's about 22%, as again 27, 28 that was there before this. And actually the taxes have gone up. So it is a win-win situation for both of us. So that's a good sign. But this time we didn't tinker with the individual taxes, which I have mentioned elsewhere. You might have read it. But on that also we'll have a look. But the whole idea this time was we wanted to give a push to infrastructure. We wanted to expend and spend more, because that is what we think is going to help the GDP and the economy. We have done that. Maybe we'll wait for another year to improve the tax structure a little more. Thank you.
Honorable Revenue Secretary. Now I have the pleasure of inviting our past president, Mr. Dr. Mahesh Gupta, who is also the Managing Director of Kent RO Limited, for his remarks and for his question, please. Dr. Mahesh Gupta, please.
I think sir is mute.
I think his connection has gone off.
Instead, can I request Sri Sanjay Bhatia ji to our past president to have his question?
Thank you, Mukul, honorable Revenue Secretary, sir. And I mean, it was really indeed very nice to hear from you, and of course, gone through the budget provisions. It's most welcome. I think I'll just straight away come to one or two comments which I have. May not be coming out of this budget, but otherwise it may be worth I mean your consideration, sir. One is that in case we want to promote the Make in India and localization, can we look at having some dedicated fund which can be used by the domestic industry to replace the import what they are doing, whether these are components or raw materials or whatever, so that they can really start making that in India. In case there is some fund specially for that, it would really help the domestic industry to really move ahead on that, sir. That is one. Second is the TDS provision which came, I think, last year on we are supposed to deduct TDS on purchases made more than 50 lakhs and all those things. I think these are certain things, I mean, which are really, I mean, this is more of a compliance issue. That these, I mean, there's so much of clerical work has gone up with the corporates. I mean, in case that can be looked at whether this really worthwhile doing all that, because you see, keeping a track of deductions of that TDS, I mean, becomes a big sort of a burden for all of us, sir. Third is what we see recently is that because now the GST audit has really come up, and I mean they have already I mean they awakened up or what. I think it's good, but I think the GST liability on the guarantees provided by the directors for the loan taken by the company from bank. Now they're talking that there would be a GST liability on this. This is a service given by the director to the company. I mean, I think we are stretching the things too far, sir. I think it really needs to be looked at whether this is really required. And the last thing is the department GST is asking for the GST on the ocean freight, while you have already paid while calculating the assessable value, you have already paid the IGST on that. So these are few things which are irritants which have come up and which would unnecessarily lead to, sir, more litigation, which I don't think would be the intention of all of you, sir. Thank you. And sir, sorry, last one thing I missed is that the transfer of the service tax, which was lying earlier, I mean, under the trans one, that is also not being allowed, and that's also being stopped by the audit department, sir. So I just thought I'll just mention these few things to you. Thank you very much for giving me opportunity.
If the CBIC chairman is there, I would like him to respond to these questions. I'll give a very general answer. I don't think he's there.
I don't think he's there, sir.
Okay. Let me not go into specifics, and I'll encourage you to interact with he was not well. I spoke to him in the morning, so you can interact with him or one of his officers to get further clarification. But first thing which you mentioned was the fund available for what I got the import was that in case you want to substitute any imports or you want to manufacture them in the country, you want recourse to some funds or a fund created.
Easy loan, sir. Yeah.
So basically you are looking at some soft loans.
Soft loans, yes.
Okay. So this is an interesting thing because to be very frank with you, what we find is that the debt is still available from the various banks, NBFCs, The problem actually is the equity part of it, and that is the reason that we have actually created some funds or fund of funds to contribute to the equity through that route. But this is an interesting thing which has come. I'm not too sure whether the government will have so much of funds to create this thing and how it will be operationalized. But if you have some paper, I can pass it on to the Secretary Economic Affairs for him to have a look. I'm quite aware of your second pain point. The second point, which is a pain point, which is a big pain point for all of you. This happened in the last budget. A lot of you have come back to me on this 0.1% TDS on purchases above 50 lakhs. I've taken note of it. This is the answer that I'll give. So I'll have a separate chat with my chairman on this. I've had one chat with them, so let me have another chat with them. Let me see, because you know what is happening today is on the direct taxes. One of the reasons, I'm not saying for the corporates at all. I'm not saying for the bigger firms at all. But one of the ways that my tax revenue is going up is also because of the TDS. That I'm able to track transactions. Now the point is, which transactions should I track and what is the need to track what transactions, and how do I play with the compliance burden versus tracking the transactions. For example, I'll give you one statistics that I was looking at data that 11 crore people have paid us taxes either through returns or they have filed returns and then paid taxes, which means they have paid TDS in some ways, but only 7 crore of them have filed their returns. I don't say that the other 4 crores were bound to file the returns, but we have also collated data that some of them were supposed to file returns, and that is why we have come up with those clauses of doubling the TDS in some cases where they have not filed returns. But I completely appreciate and take your point and note it down. GST audit was not happening. When I came here, I think we are running into the 5th year of the GST. The GST audit was not happening. So there are a lot of issues that are also coming up in the audit. So they have woken up. So once we wake up, we create some issues, but I think it will settle down sooner than later. The other interesting point you mentioned is service given by directors in terms of guarantees. I'll have a look. I just can't answer this to you right away. So I'll ask the CBIC chairman, and same about the ocean freight, which you mentioned. So, but thank you for all those comments. I'm making note of them.
Thank you, sir. Can I request our learned past president, Dr. Mahesh Gupta ji, to post his query? Dr. Mahesh Gupta ji.
He's still muted.
Dr. Mahesh Gupta ji, are you there?
No, he's there, but I don't think we can hear.
Unmute yourself. Sir, आप unmute कीजिए अपने आप को. Your voice is not coming. Okay. In the meanwhile, he connects. Can I request our Vice President, Sri Sanjeev Agarwal ji, to say a few words and some query in case he's having to ask to Honorable Revenue Secretary, Sanjeev Agarwal ji.
Agarwal ji, you'll have to unmute yourself, please. Sanjeev ji, please unmute yourself.
Yeah.
I've been unmuted.
Yes.
Respected Shri Tarun Bajaj ji, Revenue Secretary, Minister of Finance, Shri J.B. Mohapatra ji, Chairman, Central Board of Direct Taxes, Shri Saket Dalmia, Vice President, Shri Senior Vice President, PhD, CCI, our distinguished past presidents and members of the Managing Committee of PhD, CCI, Excellencies, distinguished guests, ladies and gentlemen, friends from the media. A very good evening. On behalf of the PSDCI and industry and my own, it's indeed pleasure to propose. I'm proposing a vote of thanks, Vimal. Okay?
No, sir.
Sanjeev ji,
we can wait, sir. I think we have some time for the vote of thanks. I would, if Dr. Mahesh Gupta is available.
Actually, he unmuted himself, and then I think we were not able to listen to him. Yeah.
Mukulji, can I come in now?
Yeah,
please, sir.
Okay. Thank you, Mukulji. Sorry for the voice. Honorable Tarun Bajaj ji, Chairman sir, first of all, my compliments to you all for a wonderful budget which has been presented by the team. And I must, first of all, my view is that you have presented a roadmap for Amrit Kaal. It's not like a one-year budget, but it's a long-term budget to be presented for years to come. So that's a very strong political statement. And it's a growth-oriented budget of increasing the outlay to 7.5 lakh crores from the 5.5 lakh crores. So all good things have been said and everything is very nice. I just want to make one suggestion to you, and I welcome the digital rupee which is going to come in 1 year's time. And in this digital rupee, I have one suggestion to make, that if digital rupee can somehow be connected to the gold value, that means it becomes more stable, and people in India have a lot of values for the gold, and a lot of import happens due to gold. And if we can make this digital rupee as a 1 gram gold, it will go a long way to reduce the gold import in the country, and it will also help people to easily trade at the counters, and it can become a big game changer compared to cryptocurrencies. That's the only suggestion I want to make. And thank you very much for giving me time.
Mr. Gupta, I am not quite aware of the digital currency that the RBI is planning to come out in the current year, but I would strongly urge you that you could also communicate with the Reserve Bank of India and also with the Secretary Economic Affairs, because to be very frank, as an acceptance of my ignorance on this subject, I really don't know. In fact, I was also asking him as to how this would function. So you are giving another suggestion that 1 gram gold to be traded, but I would encourage that if you could interact with the Secretary Economic Affairs on this.
Thank you, sir. Thank you.
We have our chairman CBDT, Mr. Mohapatra. Can I request Mr. Mohapatra to open his video and give his remarks for Mr. Mohapatra? Can you hear me? I'm being told that you are here. So in case he's not available, can I request my co-chair, Tushar, to post a query to Honorable Revenue Secretary?
Sir, very good evening, sir. It's an honor, sir, for you to take out time, sir, and be here with the chamber, sir. We all are extremely grateful, sir. Sir, there's one topic in the budget which, of course, is a burning topic, which is the taxation of cryptocurrencies. And you have, sir, spoken in the press conference immediately after the budget that the taxation regime is something which will be prospective in nature. And there is also an additional procedural obligation to deduct taxes. Now, sir, if we read the fine print, what appears is that the procedural obligation of TDS, even though it appears to come from July 2022, there are some provisions which seem to suggest that this levy will be applicable right from the time other sections like 194O, etc., were in operation. Now, sir, we've seen, sir, there is a definition of virtual currency, and the way it has been defined, it's sui generis in nature, which is, it's not even a good, not even a service, and it's been defined as a separate digital asset. So, sir, we really wanted to know, sir, from a pure trade and industry perspective, because retroactively it will be very difficult for anyone to now withhold taxes. So what is the intention, sir, of this provision? That's one, sir. And secondly, sir, you had mentioned about the special economic zones, and we heard, sir, the Honorable Finance Minister in the speech said that there will be a complete replacement of the legislation, and the new legislation would enable the states to become partners to enhance exports. Now, on that, sir, just from a pure international perspective, sir, what we've seen, especially in China, is that the model of special economic zones is more like cities, sir. So, in fact, in some areas, sir, you need a separate passport because they are specifically regarded as delineated areas. They are foreign zones, and everything that any activity that is carried out in that zone is completely exempt. Now, so these were the objectives when the legislation came here also in India, and most of the stakeholders believed that this would go a long way in enhancing such exports, and also because the kind of people, so the market we have here, there will be a lot of investment. Now, sir, we just would like to know, sir, that what is the kind of model which we are envisioning in the new SEZ policy, sir? These were my two broad questions, sir. Thank you, sir.
Sir, I just have a small, I would like to welcome Dr. J.B. Mahapatra, the Honorable Chairman of the CBDT. We had welcomed Mr. Mahapatra initially also, but I'm sorry, I think he had logged in late. So I really welcome Mr. Mahapatra to the event. Thank you.
If Chairman CBDT has logged in, I'd like to say that to whatever extent he wants to answer on the cryptos, he can answer that, because he's been educating the people a lot on the cryptos. I've also learned from him, and I've read the provisions and also discussed the provisions before they came up, but I think it's better if he does it.
Sir, the chairman's ability is there, but he's on mute and we can't see his visual also right now.
Okay. So what I will say is, you mentioned, I just want to clarify, the taxation is not prospective at all. If somebody is trading today and if he's making money, it doesn't mean he'll not pay taxes now. We've only brought some certainty to the tax regimen, which would be applicable from 1st of April. But before that, obviously, because there is no separate head for this, so people would either put it in the capital gains or into business income or other sources. So then it will be a matter of assessment, and things would follow. The TDS, I think it's better the answer comes from them, but right now I think the provision is from 1st of July, which is there because of some technical reasons, but I have asked them to have a look at it and let us see if we can make some changes and bring more clarification. We'll try and bring more clarification. Thirdly, I have seen that there are a lot of questions that are being raised on cryptos. So maybe there would also be a need for some circulars or clarifications or rules. So we'll take a call on that after we have taken some respite from the budget and the post-budget discussions. We are planning to meet on Monday, the direct taxes, and we'll take up this issue. So a lot of these clarifications will come in due course of time. But yes, right now, as we say in Hindi, mota mota, it is 30% taxation with applicable surcharge and also a 1% GST on the transactions, and the GST, TDS, 1% TDS, and TDS is on the consideration and not on the profit. So that is what the thing is. On your SEZ, I would say that I was mentioning to Mr. Talwar earlier that we had some deep discussions with all of you. Yeah. So I had certain ideas as to what we wanted to do, but it is more commerce that wants to actually revamp the whole thing. So they have actually made a mention of the domestic thing which you have mentioned. It is also to be understood that the SEZs are not WTO compliant. And my understanding from whatever meetings I had with you and further discussions in the department, I realized that there are a lot of issues that we need to settle in the SEZs. So I think your views and views of others would be taken while that law is formulated. And I think it will go through some discussions before it is done. Let us see if the states are to be made a partner that signal some basic changes in the SEZ policy. So let us wait for that, and I would encourage you to interact with commerce on that. My request is that we should, if we can close the discussions.
Sir, may we request you for 5 minutes because we would like to invite our co-chair Shri Satish Jolly ji for his few comments in a very few minutes, and thereafter vote of thanks by our Vice President Shri Sanjeev Agarwal ji.
Thank you, Mr. Sharma. Sir, without taking too much of your time, first of all, thank you for sparing the time. I think Mr. Agarwal will propose the formal vote of thanks. I just wanted to, sir, congratulate you on the budget, especially the clarity of thought and the clarity of words which have been used. We've seen a very descriptive memorandum accompanying the finance bill. I think it gives a lot of thought. It shows that a lot of thought has been put in particularly on the matters like my colleague Tushar said on cryptocurrency, a clear demarcation between a digital rupee to be issued by RBI and other crypto assets. Some thoughts on that, which I also had on maybe addressed through through a circular like we had when fringe benefit tax was given, so that there is no tax leakage, both from a government side and also from the taxpayer side. Whoever want to be compliant should be able to do that. I think some of the thoughts which I had, sir, just wanted to share before I give my concluding remarks, sir, that a lot of people are paying salaries by way of crypto. Now, how does the TDS work, whether you apply the new provision or you apply the existing section 192? When the seller is a non-resident, then again, do we apply the higher rate under section 195 or the lower rate under the new section of 1%? What happens to crypto miners and the expenditure which a crypto miner incurs to get the asset in place? And this is a fungible token. It can be switched from one exchange to another. Does each time it changes an exchange, is there a withholding tax? I think these are some of the issues which I have heard from the industry, which have been raised. If those can be covered by way of a circular, sir, I think it'll provide a lot of clarity. I must also, sir, congratulate you on the focus on giving a sustainable and green environment. I think the green bonds which were announced, sir, we really are welcome. The battery switch provision which has been brought in, I think these also show that apart from doing business, you must also acknowledge the human value, and I think no unhealthy person can do well. So I think with those remarks, sir, I hand it over to Shri Agarwal to propose the formal vote of thanks. Thank you so much for your time, sir.
Thank you, Sajid ji. Now we invite our Vice President Shri Sanjeev Agarwal ji for the vote of thanks. Shri Sanjeev Agarwal ji, please.
Yes. Respected Shri Tarun Bajaj ji, Revenue Secretary, Ministry of Finance, Shri JB Mohapatra, Chairman, Board of Direct Taxes, Shri Mukul Bagla, Chairman, Direct Taxes, PSD CCI, Shri Bimal Jain, Chair, Indirect Taxes Committee, Shri Saket Dalmia, Senior Vice President, PSD CCI, our distinguished past presidents and members of the Managing Committee of PSD CCI, Excellencies, distinguished guests, ladies and gentlemen, friends from media. A very good evening to all. On behalf of PSD CCI and industry, and on my behalf, it is indeed a pleasure to propose a vote of thanks to Shri Tarun Bajaj ji, Revenue Secretary, Ministry of Finance, Shri JB Mohapatra, Chairman, Central Board of Direct Taxes. Sir, your kind words have been truly interesting and enlightening. We would like to thank you for sparing time from your busy schedule for giving us all the glimpse related to the Union Budget 2023 announcement by the Honorable Finance Minister Shrimati Nirmala Sitharaman. It is highly encouraging to note that the budget aims to focus on infrastructure and connectivity. To facilitate faster movement of people and goods, PM Gati Shakti will encompass the 7 engines for multimodal connectivity that are roads, railways, airports, ports, mass transport, waterways, and logistics infrastructure for the states, with speedy implementation of development projects through technology, through rupees 20,000 crore financed by the government to speed up this project. The Union Budget capital expenditure budget is being increased by 35.4% from rupees 5.54 lakh crore in the current fiscal year to rupees 7.50 lakh crore in 2023. With this investment and the provision for the production of capital assets through grants and aid to states, the central government's effective capital expenditure in 2022-23 is estimated to be rupees 10.68 lakh crore, which will be about 4.1% of GDP. It is appreciable that the emergency credit line guarantee scheme has helped 130 lakh MSMEs mitigate the worst impact of the pandemic. In this regard, extension of ECLG scheme up to March 2023, along with extension of guaranteed cover by another rupees 50,000 crore, bringing the total cover under scheme to rupees 5 lakh crore now. Also, the IT, defense and R&D will be opened up for industry and startups, and 68% of capital procurement budget in defense will be earmarked from domestic industry in 2022-23. This will provide a great boost to the industrial development of the country. Today's discussion has provided us valuable insights. The presentations and viewpoints are truly enlightening. We heartily thank and express sincere appreciation to all for joining us for this session. Thank you all. Jai Hind.
Thank you, Shri Sanjeev Agrawal ji, Vice
Thank you so
President,
much.
PSD Chamber of Commerce and Industry, and thank you, our Chief Guest, Shri Tarun Bajaj ji, and our Guest of Honors, Chair CBDT, Shri Mohapatra ji, and Chair CBIC, though he was not able to join, and our chairs of the Direct Taxes Committee, Indirect Taxes Committee, and our former presidents, and all our esteemed speakers and members of the PSD Chamber, thank you very much for sparing your time and joining in this very, very wonderful discussion, which is for the Union Budget 22-23 to become a more resilient economy in the global ecosystem, where we are already fastest moving economy and we should be lucrative in the global charts going forward. Thank you very much for your participation. Thank you, sir.
Thank you, everyone.
Thank you, sir. Thank you, sir. Thank you.